Howdy, everybody. Welcome to Liberty Call. Today is Friday, July 11th, 2025. Hope you're having a fantastical day out there in the interwebs. Pretty nice day here. A little cloudy here and there, but not too bad. Hope everyone's got some good plans for the weekend. I got a comedy show me and the wife are going to this evening to my favorite comedians. They're libertarians, so you probably wouldn't like them. But anyway, so markets cooled off as Trump fired another trade shot, this time slapping a 35% tariff on Canadian imports. Oh, no. The Dow slipped, CoreWeave tanked nearly 10%, and investors took a defensive stance. But not all was gloomy. AMD rallied on AI optimism. NVIDIA held above $4 trillion, and Bitcoin hit a new all-time high last night. As the tariff tit-for-tat ramps up, Wall Street's starting to sweat. So before we break all the news down for today, I need some help from you. Give me some thumbs up, a like, a share, subscribe, a follow, and press that darn notification bell. All righty, let's get into the markets for today. Dow Jones down 0.63%. 279 points, closed at 44,371. SP 500 down a third, 20 points, closed at 62.59. NASDAQ down 0.22, 45 points, closed at 25.85. The VIX was up 3.93% today. It's at 16.4. Canada down 0.22. Brazil down 0.41. And Mexico down 0.26. Lots of red. Same thing headed over to Europe. Germany down 0.89. The UK down 0.38. France down 0.92. Netherlands down 0.63. Spain down 0.94. Italy down 1.11%. Switzerland down 1.69%. And Portugal down 0.27%. Russian exchanges both red again today. The MOEX down 3.27, RTSI down 3.24, and the overnight markets in the UK and Japan was down 0.19, Australia down 0.11, New Zealand down 0.85. In China, the Shanghai up 0.01, Shenzhen component up 0.61, China A50 was closed, DJ Shanghai up 0.2, Hang Seng up 0.46. And the Taiwan weighted when it last closed on the 10th was up 0.74. All right, so those are our markets. Let's get to the, let's look at our chart and see how we did for the week. Starting out with the Dow Jones. We are going to finish the week probably in the red by about 0.11%. S&P 500. Green by about 0.43. The NASDAQ up about 0.79. The Dow Transports up about 2.41. And the Dow Utilities up about 0.84. So kind of a muted week across the board, but nothing too terrible. Let's go back to the daily chart. And we've had a nice rally here the last going back to about the 23rd of June. So what's about 2 weeks? There's a fly buzzing around driving me crazy. So, but in that time, we're up about just under 5%. So not too bad. But until we see some degradation in the other aspects of the economy, spending number one, I think would be your number one thing to look at. Number two, that would follow that would probably be jobs. So, all right, well, let's get to the economic data that came out this week. Starting out with jobs, initial jobless claims came into 227,000 against a 236,000 forecast. Previous number was 232. Continuing claims came in at 1.965 million. Forecast was 1.98. Previous number 1.955, so it went up by 10,000. The NFIB Small Business Optimism Index came in at 98.6. Forecast was 98.7. Previous number was 98.8. Consumer credit came in at 5.1 billion. The forecast was 10.4. Previous number was 16.87. So bit of a drop from where we were last month, but it's been kind of volatile back and forth month to month. So until we really start to see a long-term trend, I wouldn't get too freaked out. Wholesale inventories month over month contracted at 0.3%, right on forecast. Last month was growth of 0.2. And the federal budget balance came in at $27 billion. The forecast was a negative $41.5 billion, and the previous number was a negative $316 billion. So not sure what happened there. It's a little strange. All right. Well, that is all the data for the week. So, all right. Well, let's get to the market recap. SP 500 stumbles as trade war fears intensify. Right. U.S. markets ended lower Friday as trade tensions escalated after President Donald Trump announced a new 35% tariff on imports from Canada, reigniting fears of a global trade war. The SP 500 and NASDAQ composite retreated from recent record highs following the news. The Canadian tariff, effective August 1st, adds to a growing list of duties Trump has levied this week, including 25% on South Korea and Japan, 50% on Brazil, and pending measures against possibly targeting the European Union. Trump claimed the Canadian tariff was partially a response to the flow of fentanyl across the U.S.-Canadian border and alleged existing Canadian trade barriers unfairly target American companies. Brazil warned of retaliatory action if Washington proceeds with its 50% tariff, while the EU awaits clarity on its own tariff fate, raising further uncertainty about ongoing trade negotiations. Despite the trade concerns, some optimism in corporate news helped limit losses. NVIDIA closed above $4 trillion market cap on Thursday, cementing its lead as the world's most valuable publicly traded company. Levi Strauss rose on upbeat guidance, though Penn Entertainment fell over 5% amid missing gaming revenue trends. Looking ahead, focus shifts to Q2 earnings season with major banks like JP Morgan Chase, Wells Fargo, Citigroup, and Bank of New York Mellon set to report Tuesday. Meanwhile, the June Consumer Price Index report due next week looms large. Economists forecast a 0.3% monthly increase, which could weigh heavily on the Federal Reserve's upcoming decisions. While minutes from the Fed's June meeting revealed some openness to rate cuts, and some also said, there were a bunch of Fed governors who don't want any rate cuts at all. Most officials remain cautious due to expected inflation from Trump's tariffs. No, it's not from Trump's tariffs. It's from the increasing of the money supply. Fed funds futures currently suggest a low probability of a rate cut in July, but expectations are rising for easing by September. All right. Next up, from investing.com, unexpected surplus in federal budget balance signals a bullish trend for the U.S. dollar. The latest federal budget balance report revealed a surprising surplus of $27 billion for the month, sharply contrasting with the forecasted $41.5 billion deficit. This unexpected swing not only exceeded expectations, but also marks a significant fiscal improvement compared to the previous month's staggering $316 billion deficit. The shift from red to black suggests stronger than anticipated government revenues or reduced spending, signaling potential fiscal tightening or economic resilience. I consider it probably more of a blip. We'll see what happens next month. As a key indicator of the federal government's financial health, the budget balance measures the difference between income and expenditures. A surplus reflects that government revenues outpaced its spending, a development typically seen as bullish for the U.S. dollar. Investors and analysts often interpret such results as supportive of currency strength, especially in contrast to persistent deficit narratives. This improvement may also enhance confidence in the U.S. government's fiscal outlook, potentially reducing pressure on bond markets and easing concerns about runaway debt accumulation in the near term. Well, that's still a huge worry. While a single surplus month doesn't redefine long-term fiscal trends, it does provide a data point that could sway short-term market sentiment and policy discussions. However, the broader economic picture remains complex, and this surplus should be viewed in conjunction with other indicators such as inflation, interest rates, and employment figures to assess its lasting impact. Again, we do this 4 or 5 months in a row, and I'll be like, somebody in charge is doing something right. But I doubt that's the case. All right, one last article from Zero Hedge. Education Department to resume interest accrual on 7.7 million student loan borrowers. Sorry, kids, you got to pay your debts. The U.S. Department of Education has announced that student loans under the Biden administration's Savings on Valuable Education, the SAVE plan, will begin accruing interest again starting August 1st of this year. This decision follows a court injunction that deemed parts of the SAVE plan illegal. Introduced in 2023, the SAVE plan aimed to make student loan repayment more manageable by calculating payments based on income and family size, offering zero monthly payments for individuals earning less than $32,800 and preventing interest from accruing. Just because you're poor doesn't mean you don't owe the money. Sorry. After a federal court blocked parts of the plan in June of last year, loans were placed into forbearance at a 0% interest rate. However, the Eighth Circuit Court of Appeals struck down the SAVE plan in February of this year, and subsequent injunction in April required compliance. The Education Department clarified that interest will not be retroactively applied, but will begin accruing on August 1st. Borrowers will have to start making payments, including on the newly accrued interest, once the forbearance ends. Starting July 10th, the department will reach out to 7.7 million borrowers in the SAVE plan, advising them to transition to legal repayment plans like income-based repayment. The department emphasized that borrowers currently in SAVE cannot access key benefits or progress towards discharge programs unless they switch. Critics claim the SAVE plan and Biden's broader forgiveness efforts were unlawful and burdened taxpayers. Yes. The Education Department notes that 42.7 million borrowers owe $1.6 trillion in student debt, with only 38% making payments currently. Jesus Christ. The Trump administration promises to guide borrowers towards compliant repayment plans. Sorry, folks, you borrowed the money, you got to pay it back. I don't care if you got a worthless degree or you don't have a good job to pay it back. Should have thought about that before you borrowed the money. All right. Well, that's everything that I had to babble about today. If anyone needs anything from me, where do you want to go? Doodle-doo-doo-doo. DSAFinancialGroup.com. All your financial planning needs can be addressed here. So give me a buzz. I'd be glad to help. All right. Well, I hope everyone out there has a wonderful weekend, and I'll talk to everyone again next time on Monday. Adios.